full screen is okay. It's visible.
Yeah,
Yes.
for me it's visible.
Yeah, great. Bhavna, Radhe, Pranav, again, I would request all of you to be participative in this. Yeah, the more participative you are, the more energy I have. If you guys are low energy, I am also low energy. Yeah, so please help me out here.
Sure.
So, so basically, forensic analysis of equities, right? So, what does forensic mean? Anybody? Where have you heard forensic? You must have heard it in the context of
Crime and
exactly, exactly, crime, criminal shows, right? So
yes.
forensic analysis is basically evidence-based analysis, which is used to solve crimes. Okay, so in the context of equities, it means you don't trust the management on face value, which means you don't trust everything they say. Rather, you go deep into their balance sheets, cash flow, annual report, profit and loss statement, and try to see if everything seems okay from a logical and mathematical point of view. Okay, so that is what forensic analysis means. It's an independent analysis by somebody who is evaluating that stock, and he's using data, publicly available data and verifiable data, to check if everything that the company pretends to say is true or not. Yeah, so that's the essence of forensic analysis. So there are about 8 to 9 different major pillars of how I look at forensic analysis. Of course, I am also in a process of evolving in terms of learning to do forensic analysis. So there might as well be 3 4 other points which we miss out here. So if any of you can think of any other points that you've come across, especially Gaurav, please do let me know. So I'll incorporate that also in the presentation. But I think this covers more or less 70 to 80% of the entire universe of forensics. And we'll not go very deep because it's just our introduction, but we'll sort of go into some annual reports and see how to look at these things. Yeah. Okay. Cool. So let's come to the first parameter of forensic analysis. Yeah. So the first thing that we want to check, guys, is does management have skin in the game? Okay. So can anybody tell me what does this mean? What is skin in the game?
Any important role?
Sorry,
Any important role?
important role. Okay. Okay. Anybody else? You must have heard this phrase.
Knows the industry in
uh,
which they are working.
Knows the industry in which they are working. Okay.
Maybe
Bhavna,
they are
anything from you?
personally involved.
Yeah. Can you elaborate? What does that mean, personally involved?
Uh, Maybe they have a major stake in the company.
Absolutely. Absolutely. So, skin in the game is a term which basically means when you are saying something or doing something, say I am recommending a stock to you guys, okay? But I am not personally invested in that stock. So my skin in the game is zero. I can say anything, it won't have any impact on me, right? So a manager is supposed to, an investment manager has skin in the game when he himself owns that stock, he or she. And management of a company has skin in the game when they own a significant chunk of the company. Okay, so promoter ownership percentage is one of the biggest indicators of skin in the game. So we'll basically look at these three things when it comes to skin in the game. Promoter ownership, that is one important thing. So generally, if a promoter owns 40 50% or more, you can be fairly confident that with regards to that particular company, okay, the promoter has enough skin in the game. Okay, but that is not enough. Okay, so can you guys think of a scenario where a promoter, he owns say 70% of a company, okay, but he still does not have enough skin in the game? Can you guys think of one scenario where this could happen? He owns 70% of company A, but that still doesn't mean that he has enough skin in the game to really care about the company so much that as a minority investor, me and you can feel comfortable. Can you think of one scenario where this can happen?
If he has pledged his
Yes, that is
ownership.
that is one possibility. So pledging shares is basically uh, when you give your shares that you own in a company as collateral to a bank and you take a loan against that. Yeah. So that is called pledge shares. So suppose you own 70% of a company, but out of that 70%, 50% are pledged to a bank. Okay, because you've taken loans against that, then that means that your skin in the game is effectively 20%. So that is one way. What is another way? Think of this promoter as an entity who can own multiple companies and do multiple businesses. In that context, even if he owns 70% of one company, with regards to that company, is there a possibility that he may not have enough skin in the game? Okay, so think of it like this. Think of a promoter like say Aditya Birla Group. Okay, so think of Kumar Mangalam Birla. Okay, suppose there is a small company. I unfortunately don't have a real example of this. I wish I did, but so I'm just going to go with a hypothetical company of the Aditya Birla Group. Suppose Kumar Mangalam Birla owns 70% of a small company. Okay, let me put up an Excel sheet here. Let's look at this with the help of an Excel. Suppose your company name is and market cap. Okay, in crore. So suppose your company name is A. Market cap of this company is 1,000. The whole Aditya Birla Group is, say, 1 lakh crore. Okay, and Mangalam Birla ownership. Okay, say he owns 70% here. Okay, and out of the entire Aditya Birla Group, he owns 30%. Okay, so KM Birla ownership in crores. How much? So he owns 700 crores here, but his wealth from the Aditya Birla Group is 30,000 crore, right? So out of his, so what is his total net worth? Total net worth is 30,000 only. Assume that he doesn't have, anything else, any other land or any other wealth. His entire wealth is in his companies. Okay. So his entire wealth is 30,000 because the 700 is also part of this 30,000 because this company is part of the Aditya Birla Group, right? So out of his total net worth, what is the percentage net worth? How much does the ownership in that company translate? It's only 2.3% of his entire net worth, right? So tomorrow, if this company were to go bankrupt, will Aditya Birla even feel the pinch?
Of
Yes or
course
no?
not. Of course not.
He won't,
Yeah.
right? So yeah, so this is an extreme example of this happening. Basically, what you should keep in mind is real skin in the game is dependent not on what percentage the promoter owns of that company. It depends on that ownership in the company divided by his total net worth. Is it a significant number? If that number is 1%, 2%, then please understand the promoter actually does not have skin in the game in that company because it's a puny part of his ownership. But if it is 30%, 40%, then you can be assured, even if the company's ownership. So, for example, there's a company called Laurus Labs. Okay, let's look at Laurus Labs. Yeah. So, what is the promoter holding? Bhavna, can you see the screen? What's the promoter holding?
27.2%.
Yeah. Would you say this is good skin in the game? Optically?
Yeah. Yeah.
Okay.
Like it should be around 40% maybe.
Right.
40 to
Right. So optically, it looks like it's not very high, right? It looks
Yeah.
like this guy has only 25% holding.
yeah.
But what if I tell you, Bhavna, that this is a first generation entrepreneur who has built this company from 0 rupees up to 18,000 crore, and his entire wealth is the stocks of this company that he holds. That means this is probably 99% of his net worth. Now, does he have skin in the game?
Yes.
He does, right?
Yes.
So this is exactly what I want to explain. That skin in the game is basically your ownership in a company divided by your net worth. Tomorrow, if Gaurav has invested in Tata Motors and Tata Motors stock becomes 3x from here, okay, and the Tata Motors holding for Gaurav as a percentage of his entire wealth becomes 50%, he will be very invested in Tata Motors, right? He will track every bit of news that is there about Tata Motors much more than any of us.
Yes.
This is exactly how it works for companies and their ownerships. So, any questions here? That's all I wanted to.
I have a question.
Yeah, Gaurav.
So when you say net worth of a promoter, how do you determine the net worth? I mean,
Yeah.
so,
So Gaurav, there is no, very clean answer for this. You have to basically, your radar has to fire when you think of skin in the game to check this aspect. So what happens is sometimes in the annual report, you'll get to know there are 10 other companies where the promoter has a beneficial interest. Okay. Because those are listed, because they will generally come up in your related party transactions. When I say listed, I mean listed in the annual report, because there will be some related party transactions mostly. Otherwise, if you just Google the promoter, if there is a value picker thread, you will come to know from. It's very rare, Gaurav, that the company is not a very small micro cap. Company is of a significant, the 2,000, 3,000 crore company, and the promoter has multiple ownerships in multiple companies. But you will not have any info on the internet. It's very unlikely.
Right, got it.
So basically, it's up to you to sort of use resources like annual report, value picker, other forums, and Google to sort of figure this out.
My question was also because can we also use Zoba Corp? But I'm not sure if that would be
See,
logical.
Zoba Corp you can use. Zoba Corp is actually, when you Google, you will get results from Zoba only. The thing is, Zoba will not have your market cap, right? Zoba will only tell you the listed equity, the book value of equity.
No, even if they give us which companies they have, then we can find out all of that.
That
But
you can get.
my question was, how do you know where all the promoter has, say, more than
Yeah.
5%?
So I'll give you a practical example. Okay, I'll give you a practical example. So there's this company, notorious company called Tanla. So the promoter, it's a very notorious company. The promoter does not have a good reputation in the market. The promoter was initially in the real estate business. Okay, in 2008-9, and then suddenly he decided, I want to get into a software. I want to form a telco software kind of a company. He was connected to Rajshekhar Reddy, who was the father of the current Andhra Pradesh chief minister. And he also is a director in the unlisted construction company called Aparna Constructions. Anybody familiar with Hyderabad will know this company. They are the leading real estate company in Hyderabad. Okay. Now, Gaurav, it's not listed, so I can't tell what is his beneficial ownership there. But I will always have this risk in my mind whenever I think of. So one of my major risks for Tanla is that this guy is, one, politically exposed, and second, he has a lot of ownerships in real estate. So how much does he actually care about Tanla? Okay.
Right.
Even though right now the net worth of his Tanla thing is 5,000 crores, so it cannot be 1% of his net worth. I'm sure it will be in the 20, 30, 40%. But I know for sure it's not 80, 90%, because he's also into other things, right? So this will never be a yes, no answer, Gaurav. It will often be a, okay, I'm tending towards this answer.
Got it. Yeah.
But for Laurus Labs, the reverse you can disprove. So you will see many people mindlessly saying that, oh, Dr. Chava has no skin in the game. But you just have to think from first principles. Actually, he's probably one of the founders who has 100% skin in the game. Right. Similarly, RACL Gear Tech. We have discussed this before.
Yes.
That guy was an employee who became the MD and owner. Right.
Yes.
So 100% skin in the game. You Grow Capital. The reason I am bullish on the company, Gaurav, is because that guy actually has 100% of his money in this company. Right.
Right.
He was the CEO of a corporate company. He must have had some savings. Just put all of that into this company.
Got it.
So, yeah. So any questions, guys, before we move on? Radhe, Bhavna, Pranav?
No.
Okay.
No.
So pledge shares is basically you have to be on the lookout. So for example, just to give you guys a great example of a company that is being discussed every day, Adani Enterprises. See, Adani, the promoter holds 73% and he has pledged 3% shares. Okay, not a big problem. So effective ownership is still high. If you look at Adani Ports, 65% ownership, 17% pledge. Okay, so effective ownership is probably 48%. So this is what you need to be careful of. So this figure is reported on screener. You guys can check this whenever you want. Yeah. Okay. So this is management skin in the game. That's the first thing you check. Yeah. Second is board quality and autonomy. The quality of the board of governance of a company. Yeah. Can you guys think of any parameter that would signify quality of board? Acha, what is a board? Let's first address that. What is the management board of a company? Why do you need it? What does it do?
They are the people who own a substantial amount of equity in the company, and I think they are needed to check that if promoters are doing a good job, even they are not doing a bad job in running the company. So they do a board meeting where they check, where they discuss if the company is running good or bad.
Great, Pranav. So you said two things. The second thing is absolutely right, that the board of governors, the board has been appointed to make sure that the promoter or any other key management personnel is not cheating shareholders. Okay, so the board is basically the representative of shareholders, like me, you, retail shareholders, institutional shareholders, and they also take care of the interests of other stakeholders, like the creditors, the banks who have loaned their funds to that company. Okay, so basically the board is there for representing us, me and you, in a company, and to make sure that insiders are like promoters or key management personnel, CEO, MD. If you have a company where there is no promoter like HDFC Bank, okay, there the insiders are CEO, MD, CFO. So the board's responsibility is to make sure that these guys are not doing any kind of ghaplabazi inside. Okay, that very simply, that's what a board does. The first thing you said, Pranav, that board owns most of the shares of the company, that may or may not be true. So often actually board members, so the board has two kinds of members. Okay, one is called executive board members and the second is called non-executive independent board members. Okay, so executive board so every board of a company, the CEO of the company is by default part of the board. Okay, the CFO is also mostly part of the board. Okay, now here you need to understand two concepts. Okay, the promoter of a company, promoter is a very uniquely Indian term. Okay, you will very rarely hear it in the US stock market or any other stock market. So promoter means somebody, an individual or a group of individuals who started a company and own bulk of the company. So for example, Dr. Chava is the promoter of Laurus Labs. Similarly, Rainbow Hospitals, I don't know, there must be a promoter, right? Gaurav, there must be one family which is owning most of the
Yeah,
equity in Rainbow, right? So that person is called the promoter. Usually the CEO post of a company is taken by the promoter. It's very rare that the promoter will own 60% of the company but let an outsider run the company. These kind of promoters are pretty rare in India, although we would love it. I mean, minority shareholders like me would love it, because often the outsider brings more professionalism, etc. But the reality is the promoters run the company mostly, and that is fair also, because a lot of them are very, very sharp and people who actually understand the business the best. Okay, so that's the promoter. So now the promoter is usually definitely part of the board. Yeah, often you will find that the promoter is the CEO and another relative of the promoter is CFO or holds another important position in the company. Okay, so these are the executive members of the board. Executive members meaning that managers of the company who are part of the board. Okay, and the other members of the board are generally non-executive and independent, which means, for example, a chartered accountant, okay, with 20-30 years of experience is invited to be part of the board because of the experience he or she brings in relation to matters of finance. Okay, then you will often Shantanu's companies, okay, the ones he was analyzing for railway sector, since they have to interact with the railways a lot, you will often find that independent board members in those companies are people who have worked for 20-30 years in railways or in other government institutions at high posts. They've now retired and they now become independent board members. Okay, let's look at it with a concrete example. Which company, we'll open the annual report of a company and look at the board. Okay, so which company do you want me to open? Any name? Come on, guys, give a name.
Let's do Rainbow.
Okay, great. Let's do Rainbow then. Okay, so we open the annual report and let's see table of contents.
I think 5678 boards report.
5678, is it?
Yeah, on the right
yeah,
hand side.
boards report, correct. So yeah, you're right. I think this should be it. So first the board will certify the earnings, etc. Yeah, here. So this is basically the constitution of the board. Okay. So the Kancharla family, I think, is who own Rainbow, right?
Hmm.
Gaurav, I think
Yes,
this person must be the.
yes.
Then you have probably a relative or maybe not, who is a whole-time director. Yeah. So this person is the chairman and the managing director. So the chairman of the board is the head of the board. Yeah. So often the CEO of a promoter-driven company is also the chairman. Okay. Then you have Mr. Dinesh Kumar Chirla, who is a whole-time director. He is also an executive director, which means he is part of the management. These are your independent directors. Okay, which means that they have been appointed. They are actually not related to the company in any way. They will just serve on the board for 2-3 years, and they have been selected because of the key skill sets that they bring, the knowledge, experience, a prior work experience that they bring, which will help the company in running its daily affairs. Okay. Then you have two nominee directors. So nominee directors are usually, nominated by PE firms, private equity firms, which take a stake in a company. So maybe some PE firms have, bought a stake in Rainbow, and they have nominated these directors. So they will represent the PE firm's interests on the board. Yeah. Let's look at some of their profiles. So Anil Dhawan. Let's see what, yeah. So here you have the profiles. Yeah. So basically everybody's profile is here. So these are they are the executive directors. So I'll not go into this. Let's look at this gentleman, independent director. Yeah. So he was appointed in 2019, holds a Bachelor of Pharmacy from BITS Pilani, MBA from Hyderabad. He has over 22 years of experience. He has worked at Natco Pharma. This is a pretty famous listed company for 22 years. Also headed operations as the managing director at Morgan Stanley Private Equity. Yeah. So he brings experience in the pharma sector, plus he has worked for a private equity firm. And simultaneously, he is also an independent director in several pharma companies like these. Yeah. So this you will find often that one independent director is serving on multiple boards. Okay. So similarly, he is a professor, Professor Anil Dhawan. Let's see why he has been. Yeah. So see, he has got the first position in MBBS degree, MD from somewhere, and he has 25 years of experience in the healthcare industry. Right. So he works in London. So these are the kind of people who can help in advising the management on how to run a hospital in India, right? So these are all relevant appointments, good quality appointments. Then see, this guy is basically the financial representative. So he is a certified associate of the Indian Institute of Bankers, 37 years of experience, managing director of State Bank of Hyderabad. Okay. And also French operations of SBI Paris. So he is the guy who will advise them with respect to when to raise debt. Okay. Which bank to approach for raising debt, what will be the capital structure, is like 50% debt equity okay, or should we bring it down to 30%? All these kind of things. Yeah. So how many independent directors are there? Let's see. 1, 2, 3, 4. 4 independent directors and 2 executive directors. Yeah. So that's a 67% ratio. So one of the things you check when you look at board quality and autonomy. So there are two aspects. One is quality of the board, another is autonomy. Okay. So what does autonomy mean, guys? Any one of you three?
Independence, freedom.
Exactly. Freedom to act, right? So we'll see how these are measured. So one of the things you should check is at least 50% directors should be independent. If this is not the case, you should mark it out separately. Yeah. Because this is considered to be good corporate practice. If most of the board is made up of insiders and management, then of course whatever management wants, they will push it through. So let's understand the concept of minority shareholders. Okay. So if a promoter owns 70% of a company, the rest 30%, yeah, it's comprised of retail investors like me and you, and some institutional investors like some mutual fund or some foreign institutional investor, etc. This 30% are called minority shareholders because by their own they cannot pass any resolution of the board, because the resolution will require 50% voting, and the promoter can veto everything, and the promoter can get anything passed that they want to, right? So for to protect the interests of minority shareholders, independent directors are very important. Of course, sometimes independent directors are also not independent. You know, it can happen that the person is actually well known to the promoter or something like that. But then these directors have to keep changing after 2 or 3 years, so they can't stay around for 10 years. So that's a check that is already there. Yeah. So you should check whether the directors, at least 50% of the people on the board, are independent or not. If they are not, that's a red flag. Okay. The second most important thing is the audit committee. So the board forms various committees, okay, which review with management what is going on in the company. One of the most important committees is the audit committee. So the audit committee should be headed by an independent director, okay, because so the audit committee is the one who receives the auditor's reports. Yeah, every company has to appoint an external auditor who will certify their books of accounts before releasing on a public forum. Yeah, so every quarterly report, every annual report will have an auditor's report. Yeah, so the audit committee is the one that reviews with the auditor. If there is a problem raised by the auditor, the audit committee has to convene to discuss with the auditor what is the issue, whether it is a serious issue or not, how to actually sort out the issue, etc. So the audit committee, if it's controlled by an insider, it's very easy for them to sort of push down any kind of problematic issues and sort of hide them. Yeah. So it's very important that it is led by an independent director. Let's see what is the situation for Rainbow. So the audit committee, it'll take a little bit of time because so this is the audit committee. Okay. So this is the audit committee, and the chairman of the audit committee is Mr. Shantanu Mukherjee. Okay. Now I don't exactly remember. I think he was the MBBS independent director guy.
No, he was the banker.
He was the banker. You're right.
Yeah.
He was the banker, independent director. Okay. So the chairman of the audit committee is an independent director, which is fine. And then I think one or two of these guys may be the promoters, but
No, actually, all of them are IDNE.
all of them are IDNE. Yeah, you're
Yeah.
right. All of them are IDNE. So the entire audit committee is comprised of independent directors, which is great, provided that the independent directors are actually, really involved in the workings of the company. So the directors usually don't have a huge amount of salary. They will usually be paid 3-4 lakhs a year to do this job. So it is rare that I have seen that all 4 members are independent directors. Generally, there is an executive director here. But I guess this should be fine. The most important thing here is that it is chaired by an independent director. Yeah. So this is one check you should always do. And next is board members have relevant experience or are directors in other reputed companies. Yeah. So this is important. This is what we saw, right, by reading out the profiles of some of these people, that they have relevant experience. So often you will find some boards where the people who have been put in the board, they don't seem to be really impressive. Okay, so let's look at one company. I'm not saying that the board is problematic, but I think I had checked once and I didn't find the board very
I
great.
was thinking you were opening this
Yeah,
one.
because we have discussed this before. So,
Yeah.
oh my God, why is it downloading a zip file?
Yeah, it does that.
Okay.
I think now the reporting format has also changed, the XRBL format.
Is it?
Hmm.
XRBL? Yeah.
I was going through one of these webinar there they
Uh-huh.
were telling. Anyways, that's
Okay,
something
okay.
separate.
So yeah, board of directors, page 20. Yeah. Yeah. So board of directors of this company. Okay. So he is the founder guy. Rajendra Mutha is the guy who started this company, Krishna. Who is working on Krishna? Radhe, is it?
No,
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 Bhavna.
I'm doing it.
Bhavna is doing it. So you will relate to this nicely.
Okay.
Rajendra Mutha is the executive chairman. Okay. Pallavi Bhatewara is the managing director. So she is an executive director. I think she's also related to him, maybe. I'm not 100% sure, but she's not independent. Yash Mutha is probably the son. I'm not sure. Son or nephew. I've heard different things, but he is also a whole-time director, so not an independent director. Yeah. Chetan Desai is an independent director. Okay. What is his background? Chartered accountancy. So he is the guy who will help with finance. Okay. And he also serves as the chairman of the audit committee. Okay. So chairmanship of audit committee is with an independent director. That is fine. His experience is finance. Background is finance. Now, this person is again a chartered accountant with 24 years of experience. Okay. Member audit committee, stakeholder relationship committee. Okay, great. A lot of focus on finance. Now, this person is he superannuated as DGI Police Railway Protection Force. Okay. Can you guys, Gaurav and Bhavna, I would prefer Bhavna to answer first. Considering the business that they are in, what do you think about this guy? Is he a useful guy or is he a random appointment? What do you think?
Actually, yeah, I don't see the relation between him working for Krishna, being a
Okay.
director for Krishna.
Okay, Gaurav, any views?
So for me, I think one of the reason why I thought like he might be useful is because these guys are into government,
Yeah,
tenders and all. So I mean, he's a police person, right?
yeah.
They know how things work, and
So
they have
yeah,
some. So this actually puts in a lot of question on me on Krishna. I mean, I actually uh, am a bit skeptical because of the board, because I don't find them extremely good,
yeah.
especially thinking about the fact that these guys are going to, take over so much of rural healthcare and all.
Right. So I'll come to that, Gaurav, and I agree with you there. We've discussed this also before, but this particular guy, I would agree with Gaurav and Bhavna. I would say that in government business, especially tender government business, okay, where there is a process of people bidding and then one person winning and all that, there is usually some kind of ghaplabazi. Let me just That's a word that is a catch-all term in India, right? It can catch a lot of things. So I suspect that this guy has been put on the board to handle such kinds of sticky issues with government. Okay. So I see this as an acknowledgement that the business is not very clean, which I already knew before investing. But I am also a little reassured, theek hai, there is a guy who is there to manage things. Okay. But the business probably is not clean. Yeah. Otherwise, I don't see a reason to have a DJI Police Railway Protection Force in your board. Okay. Anyway. And like Gaurav said, see, again, another CA. Okay. And the last guy is a BTech in mechanical engineering from IIT Delhi. So this guy is, and this is a nominee director. Okay. So he's nominated by I don't know which
Phi
PE
Capital.
firm.
Phi
Oh,
Capital.
is it? Okay,
Yeah.
Phi Capital. Yeah. Right. So it's nominated by Phi Capital. So this, he must be a competent fellow because Phi Capital has skin in the game. So they will make sure that this guy at least is tracking. He may not be able to help in building the business, but he'll track the business and report to Phi Capital saying things are going fine or not. Yeah. He's also an engineer, so they deal with a lot of MRI machines and high-end machines. So probably some value add there. But nobody from the medical profession,
Correct.
right?
And the guy who's from the medical profession, he gets paid like 15 lakh rupees a year, sort of.
Which guy?
Their chief medical
Okay,
radiologist.
okay. Yeah,
Yeah.
so that's a problem. And also Rajendra Mutha is actually, he's a pharmacist, okay? So he it's not like he's a trained doctor or anything. He doesn't need to be also. It's not a, they are not offering medical services, but they are in the medical field. So I am a little surprised that they don't have any other people who have served on the boards of, medical companies. So this is a little strange to me. I think Gaurav also agrees. So this is what is meant by, this, that the quality of people on the board. Yeah, board members have relevant experience. Yeah, chartered accountant, having one chartered accountant is good. Okay, maybe have two. Why do you need three chartered accountants on a board? It's probably it's duplication of work, right? So yeah, so that's my opinion. So any questions before we move on to the next aspect?
No.
No.
Okay, cool.
No.
Pranav, are you there?
Yeah.
How is your internet holding up today?
It's bit of sketchy, but I'm managing.
Bit of sketchy. Okay.
Yeah.
I would really feel bad if, last session also your experience was a little disturbed. If you can do something about it, think about it, because इतना time दे रहे हो तो full मतलब उसका फायदा भी होना चाहिए ना तुम्हें.
Yeah. आज इतना नहीं हो रहा इंटरनेट
good.
इशू उस टाइम बहुत था.
Good to hear that. Acha, next is auditor quality and opinion. Okay. So like I said, every company has to appoint an external auditor who will audit all the financials, the entire, the annual report. One of the major sections is auditors report on the financials of the company. Yeah. So the auditor quality and their opinion is extremely important. Now 99% of the times the auditor will give what is called an unqualified report, which means that there are no observations. Yeah, which means that the report is clean as per them. Very rarely you will get a qualified report, which means the auditor is saying in a public disclosure that we are not comfortable with XYZ in the company. Yeah, so that is usually considered to be disastrous for a company. But still, even though it's so rare, you should always check for the opinion of the auditor. And if you're looking at a company for a major investment for the long term, you should go through the at least last 5 or 6 annual reports and just do a quick check to see whether the auditor opinions are all clean or not for that company. Yeah. So these are my points. Now the first point is the auditor a large, well-known firm? Yeah. So you must be knowing about the big four, right? You must have heard of the big four. So EY, KPMG, PwC, all these guys. Yeah, they are large auditors, usually well reputed. Plus, you have other very famous auditors, which are not as large as them, but they are basically there in the top 10, top 20. You will see a lot of large companies getting audited by them. Yeah. So if you see a large auditor, I won't say that's an automatic tick mark, but it is okay. You can at least be sure that it is not some local auditor. Yeah, local unknown auditor which might be controlled by management. Yeah. Please bear in mind that a lot of large frauds have happened under large auditors. Okay. So, for example, the Satyam scam, I think, happened when EY was their auditor. I don't want to badmouth the wrong firm, so please check it again. I mean, it was one of the big four. Okay. So the way I see it is, if it's a large auditor, I don't automatically give it a tick mark in terms of appointing the right auditor, but I just assure myself, and if it's a small company, I assure myself that they have at least gone to the pains of appointing a well-known auditor, and they've not appointed some local guy. Yeah, so that's the way I use this. Then has the auditor provided an unqualified opinion, clean report? We'll see in the annual report of rainbow, how that opinion is given. The next is auditor remuneration. So the auditor, the services that they provide, uh, there is usually a compensation given to the auditor for that, and that's given once a year. Okay, is the remuneration in line with other companies of similar size? Suppose you're analyzing company A, which is a 1,000 crore company. Suppose it is paying 1 crore to an auditor every year, whereas you have looked at 3, 4 other companies in the same industry or in related industries and they pay only 10 lakhs. That is a huge red flag. There is no reason that an auditor should be paid so much more for a company of the same size and same complexity. Yeah. So high auditor fees can point to a potential problem where the auditor is doing a lot more than what you think he's doing. He's actually helping the promoter manage fraudulent books. Okay. I'm not saying again this is a 100% bang on indicator, but it's definitely a big red flag. Next is the YOY auditor remuneration increase. Is it tracking revenue growth or is it far higher than revenue growth? That is another indicator that the auditor is actually doing a lot more for the promoter than it seems apparent. Okay, is the point clear? The third point, guys?
Yes.
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 Okay, great. So now let's look at this second point, yeah, where 99% companies will actually not fail this check, but the 1% that fail this check or have failed this check in the last 5 years of their history, you have to be extremely careful before investing in any of these. Yeah. So let's look at this guys only. Let's see where the auditor report is. So I'll have a separate session on how to go through an annual report. Yeah, that's my next session. So right now, if you're confused, that's fine. Just focus on the specific areas we're talking about. Okay, board's report. Yeah, I think in board's report only it should be there just after the board's report. Let's see. Yeah, so after all this, auditors, see the name of the statutory auditor is mentioned here. Yeah, it's MSK and Associates. I think it's one of the top 10 auditors in India. Okay.
I think there's this word called key audit something, isn't it?
Yeah, key audit observations. I think, yeah, that should be a good way to.
Just search key audit maybe. Yeah, exact match. Yeah,
Yeah,
key audit.
correct. Great. Yeah, this is a good way to do it. Thanks, Gaurav. So, yeah, so independent auditors report, right? So this is the kind of report that every auditor has to submit. Yeah. See here, first he submits an opinion, then he submits a basis for opinion, and if there are any key matters, he highlights them. Yeah. So the opinion is here. It's a very complicated language, but you will be able to understand what they are saying. In our opinion, to the best of our information and according to blah, 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 in the manner required by the accounting rules, etc., etc. And as per accounting principles, state of the affairs. Okay, where is the actual okay? In the manner so required. Okay.
I think
This-
below there's some
No, generally, Gaurav, the opinion should say that it's.
no, in the key audit matter, they have listed out what are the various.
No, that's fine. So key audit matter will anyway talk about every key matter, but there should be a there should be a statement saying that everything is all right from in the manner so required and give a so basically, yeah, so the sentence is complicated. Let's patiently read the sentence. Okay. So in our opinion, and to the best of our information, and according to the explanations given to us, the aforesaid financial statements give the information required by the Companies Act in the manner so required and give a true and fair view in conformity with the IAS prescribed under section 133. That is it. So this sentence. In the manner so required and give a true and fair view in conformity with this. This is basically a okay opinion. Yeah. True and fair view in conformity with the accounting standards, etc., etc. So that is their opinion. So you should first figure out whether the opinion is okay or not. Yeah. So that is okay. Now here they are highlighting some key audit matters. These are specific points during their audit which caught their attention and where they went really deep. So for the benefit of investors, minority investors like us, they list it down. Yeah. So what is the issue? Provision for credit loss for account receivables. So can anybody tell me what is this provision for credit loss for account receivables? ये अगर कोई बता पाएगा तो there'll be a special sort of incentive from my side, because I'll be really impressed if any of you can answer this.
Is it something like provision for bad debt?
Provision for bad debt, yes. It is.
So in case the company doesn't receive what it's supposed to receive, then the company has a provision that is set to meet that loss.
Right. So in general, you're right, Bhavna. So basically, so can you like go a little deeper into it in terms of account receivable? What is account receivables?
The bills receivables that they will receive in the future for
Yeah.
what,
So for what they have?
for the goods or services that they have sold.
Correct. Exactly. So credit loss for account receivables, it means that from the account receivables, you will usually have a percentage of that which does not come, right? Which gets into a bad debt situation, right? So what companies generally do, good companies should do is, if they've been operating for 10, 20 years and they see that every year 5 or 10% of the accounts receivable actually doesn't come and it turns into bad debt, they should proactively start provisioning for that line item, saying that if my account receivable is 100 rupees, then 5% of that 5 rupees, I already write it off. I hold it as a provision in my balance sheet, because over 10 years of my operational history, I have seen that 5 rupees to aata nahi hai. So instead of showing it in the P&L and then again having to reverse it when the default happens, I will go ahead and proactively hold a provision. So that is what provision for credit loss for account receivables is. Yeah, clear?
Yes.
Cool. So if you look at this, what they are saying is, as on March 31, 2022, trade receivables amounts to 651 million, against which provision of 58 million was made towards expected credit loss in the books of account. Okay. We have identified provisioning for expected credit loss as a key audit matter, as the calculation of credit loss provision is a complex area and requires management to make significant assumptions on customer payment behavior, estimating the level and timing of expected future cash flows. So they are saying management has provisioned some amount, but we thought we wanted to go deeper into how they have arrived at that provisioning. Yeah. So yeah, so then they explain how the key audit matter was addressed. Yeah, so they did all these following things. They obtained understanding of company's policy on assessment of impairment of receivables, requested for and obtained independent balance confirmations, verified subsequent receipts, verified aging of trade receivables. All these logical steps they did, and finally they arrived at the conclusion that, okay, what the management has suggested is fine. If they had not arrived at that conclusion, then this audit opinion here would have been a qualified opinion. Okay. So I always look at the key audit matter, because even if the auditor gives it a check, if the same key audit matter keeps coming in multiple reports, it usually is an area that you should look out for. Okay, so in this case it's fine. So the auditor's report seems to be fine. So then there are a lot more things that go into it. So yeah, so this basically finishes the auditor's report. There are some annexures, etc. But what I look at is the first page. Basically, what is the quality of the opinion and what are the key audit matters. Yeah, this should basically give you some comfort. So yeah. Any questions on this, on auditor quality and opinion? Like in the future, when you have a company to analyze on this particular part of the analysis, like auditor quality and opinion, is there anything else that's coming to your mind that needs to be discussed?
So one thing that I wanted to know was, say, for example, one auditor has been previously implicated for some fraudulent activity with some board, or
Right.
yeah, so those kind of thing. Is there a way to kind of get that information?
So basically, Gaurav, that it's a very good question. I haven't really spent time trying to identify a resource which documents this. Okay, I won't be surprised if there is a resource actually that people refer to, but I haven't come across it. It's worth our while to actually do that. So maybe, Gaurav, since I'm on the PPT, if you can make a small note, I'll definitely look into that. What I generally get the information from is when I'm reading its value picker thread, or in general when you're reading about different companies. Now, some investors, some auditors will get highlighted as a black sheep auditor. So you will know that those auditors are not to be trusted.
Yeah. Or also, I mean, say, so when I was digging a bit deep into it, I found lots of auditors in whose names there were some remarks by ICAI and all of those things, but there's nothing in a consolidated format. That's number one. Number two is one audit firm auditing, say, 10 companies. It would be very interesting to know which companies are they auditing actually.
Yeah, it would be, because I don't think such a database exists, unfortunately, Gaurav. It would be very interesting because there will be some small firms which specialize in fraud. Okay,
Correct.
So you will be able to actually chalk out a nice graph saying this company is always auditing fraudulent companies.
Yes.
Yeah. So unfortunately, I think that level of database is not there. It can be done using an NLP crawler, but I don't think anybody has done this.
Good
Because the
point.
problem is every year, the auditor changes, right? So it really has to be, it cannot be a manual effort driven. It has to be an NLP driven exercise.
No, I think the rule is every 5 years the auditor must change.
No, the auditor, I think, is it 5 years or
Yeah, the
there
audit
is,
the company must change actually. I
I
think that's
see.
the rule.
I see.
That
Is it
was also the same case with GFL. I mean, before their demerger, they had an auditor, then they had the
okay?
demerger, and then they got the old auditor back.
I see. Okay. Right. Then you must be right. So it must be then 5 years. So yeah. So basically, it keeps changing. If it's 5 years, also, Gaurav, for 20% of the companies every year you'll have a change in auditor. So you basically need to have a dynamic process there instead of a manual effort. That's why I don't think there is a database. But
No, I think from now onwards, whichever companies we are studying, at least
yeah.
we could write it down somewhere.
Yeah, at least capture the auditor somewhere so that if it gets highlighted in some database, we can then mark it.
Correct. Yes. All right. Yeah.
Right. Okay. So the next, go
Nirman,
ahead.
do you want to close today or do you want to extend?
I think I'll just finish this one point. This is quite important, Gaurav. So I think I'll finish in 5 minutes. Or maybe this will take a little bit of time because we have to go into the annual report. So yeah, it's a good checkpoint. So I am okay to close today, Gaurav. Then when shall we reconvene? Because our dates are kind of... so tomorrow evening is not possible for me, Gaurav. I had
It's okay.
already highlighted. Tomorrow morning is possible.
Yeah.
So let me know.
So my point of view is, I think, okay, I'll stop recording. Wait.
Yeah.